Hello everybody, and once again welcome to Synonomics. Last night there was a stellar run on the Wall Street once again, and I thought I'll give you a quick update on that. Of course, Wall Street, just like other markets, is riding the wall of worry. Yeah, that's what it's called. The markets ride the wall of worry. Today, that is on Tuesday, CPI data is going to be released in US. Of course, nobody's expecting miracles there. The expectation is 4.1% inflation, CPI data, which will be around 0.4% higher than the previous month. Even though it's slightly higher, I personally feel that the market doesn't care about it. Looks like market has pretty much factored in the pause in the interest rate in June, which will be announced on 15th, very soon. Bond market and stock market, both of them are pretty much assumed it. There has been more than 60% think that, or something like 70-80% think that there'll be a pause, and still 10-20% people think that there will be an increase. And when I say people, I'm talking about analysts and the fund managers. Yeah. Well, Nasdaq has actually closed at the record high, 52-week high, 13,462, which was 200 points higher. And Dow, 34,066. Yeah, it has crossed 34,000, which was pretty much 190 points up. And S&P 500, which actually has risen more than 20% from the lows, closed at 4,338, 40% higher. The good news about the whole thing is that now the market is broadening. So earlier, as I had covered earlier, the whole growth story was pretty much confined to the Magnificent Seven. Now that's not the case. If you look at Nvidia, it did not cross 400. If you look at Tesla, it did not cross 250. If you look at other companies like Microsoft and all those are pretty much $2-3 up. Meta, Facebook, it was around $6 up. So and $260, $6 is still pretty 2.5%. So what we are seeing right now, which is expected and which was expected, and it's a healthy sign that the market is broadening up. The other companies are actually moving up now. And almost, if I'm not wrong, around 20 companies have hit 52-week high in the S&P 500, which is great. Earlier it used to be just the Magnificent Seven. Well, let's look at the other markets and compare that with the US market actually. This year, in 2023, Nasdaq has given 30% return. Yes, you have heard it right. 30% return. And I'll compare with other countries very soon. Dow, on the other hand, has a little bit at 2.8%, 3%. We all know the story behind that. The Magnificent Seven. And S&P 500 has given around 13%, 13%. But if you look at the other countries, for an example, and let me start with India. Everybody is saying, oh, Indian market is doing great, and the economy is growing fastest in the world at 7.2%, and the nominal GDP growth rate is 16.1%, by the way. And what the market has done, you'll be shocked to hear that. Nifty 50, which is the broader index, has delivered 2%. Yes, you have heard it right. Just 2%, guys. If you look at Sensex, on the other hand, it's pretty much at 2.5%. And if you look at the other indices, on one hand, Nasdaq is at 30% growth. Nifty IT, which is an IT index for Nifty, has given 0.16%, almost flat. 0.16%. Having said that, you can't compare Nasdaq companies with Indian IT companies. Let's be very clear about it. These companies, Indian IT companies, are pretty much like outsourcing companies, right? Labor arbitrage. They make money from labor arbitrage. They're coders, in one sense. Whereas when we talk about the growth in the Nasdaq, it's pretty much in the AI space, artificial intelligence, machine learning. That's where these companies are going. There is no apple to apple comparison in India. In the remote side, you can actually say Tata LXI, you can say Larsen and Toubro, Mindtree IT, and maybe Happy Minds, which has not been delivering very good results. So some of these companies you can actually say that are in that league pretty much. I would also add a few more actually if you're interested to know. And again, it's like LTTS. That's one another one, and the Coforge is third one. So very few company pretty much in the mid-size range, in the mid-cap space, are the one where you can actually see that they're doing some kind of similar work, but not in the space where Nvidia, Palantir, C3AI play, right? And that's the reason why the Nasdaq is a 30% growth this year. Nifty IT is 0.16%. One other reason is that most of these IT companies in India used to get their revenue from US and other companies, or Europe and other places as well. And now when they're talking about recession, Germany is already in recession. US is talking about recession in end of this year or early next year. We have been hearing about US recession for last 1 year, by the way. And it's getting pushed out. I've never seen, in my career, I've never seen a situation like that. That everybody is waiting for the recession and the economy is moving fast. Stock market is at the record high. Yeah? So whatever recession will come, it will be pretty much like a short-lived, and I will call that artificial recession. Right? By increasing the interest rate, keep increasing interest rate, of course recession will come, guys. Number one, US market, the Federal Reserve allowed the inflation to go to 9.9%. What they were doing. And now they have been on a interest rate increase streak. They've been increasing and increasing and increasing, now sitting at 5%. And there's another 3-4 increase will come. Well, increase it to 10%. Of course, there will be recession. And when they have to talk about it, when they are going to pause, they say, hey, I'm going to watch the data. Everything will be pretty much on the data based. Then why do we need Federal Reserve? GPT will do the better job, I can tell you that. You feed the data in the Chat GPT and say, should we increase the interest rate? It will give you the answer. Jokes aside, let's see what happens. It's a very interesting time where everybody is worried about the CPI, everybody is worried about the recession, everybody is worried about the interest rate increase, and the market is actually shrugging it off and moving up. So what will happen in US? Even though the interest rate goes up or down, I think the market will go up in a normal trajectory. I am not saying the market will go for a perpetual run. Guys, this is stock market, never goes straight. My understanding is that if you look at S&P 500, it's already at pretty much 52-week high, right? 43.38. It will go up to 44.50 or 4,500 and then it will take a pause. Maybe it will retrace to another 10% or so before making a move again. The same will apply for this. But that's the way stock market moves. Well, coming back to the India market, if you look at the Bank Nifty, which is a celebrated index, banking has the highest weightage in Nifty 50. And they have performed 1.72% this year. The growth is 1.72%. So pretty much they are ranging at around flat to 2%. If you look at Australian market, ASX 200 is pretty much there, 2%. If you compare ASX 50, again 2 to 2.3% range. So these markets are not doing anything. And in some sense, this is actually an opportunity. Do you really think that the Indian stock market will sit where it is right now with 2% return? I don't think so. It's flirting with the level 18,600 and 18,700, fearing to cross the 18,880 mark, which was the 52-week high. Everybody is waiting for foreign institutions to come and buy. And that's another funny phenomenon in India. If you look at in India, every month these domestic fund investors are getting $4 to $5 billion. Yes, $4 to $5 billion. Almost 1.8 to $2 billion is coming from the SIP, Systematic Investment Plan, where all the retail investors are actually putting their money every month. They get money out of their salary and putting that there. It's a great sign. And then on the other hand, you have mutual funds and others. So $5 billion coming every month. What are these guys doing? And for foreign institutions who had gone back, now they are coming back again with full speed. If you look at the last month's data, in all the emerging market, Indian market influx has the maximum. Because I've covered that earlier. China, people are scared in investing in China. Number one, lack of transparency. Number two, it's very difficult to bring money out from China. So India becomes a popular destination. Go and invest. If the money grows, pull it out anytime. So that's the situation. I personally feel that it's a good time for people who are interested in the Indian market, directly or through the ETF. It's a great opportunity to invest, because this Nifty 50 will hit 21,000. Yes, from 18,600 to 21,000 in 1 year's time. It can be higher also. Having said that, guys, these are not the recommendations. These are my personal view, and please consult your financial advisor before making any financial investment decisions, including Nasdaq and Magnificent 7, which I cover broadly. Again, come back to the point. As I was mentioning, now the market is broadening. They're no more concentrated on the Magnificent 7. But the good thing is that, as I had covered earlier as well, Tesla continued its run. So now Tesla had a continuous run of 12 days. Yes, you have heard it right, 12 days. And now it's sitting pretty much at 250. It dropped from the all-time high of 415 to 100, and now it's pretty much 50% higher. So if you look at how far it can go, and you do some analysis, I have done some analysis for you, technical analysis. Fibonacci, if you look at in the Fibonacci chart, pretty much it's poised to hit 300 before moving further. So still a good buy actually. If you look at the other Magnificent 7, all of them are sitting on 52-week high, except Tesla. And Tesla had a great quarter actually. They just reported in April 2023. They have sold 422,000 cars, which was a whopping 20+% higher than last year. I'll cover in details Tesla, because Tesla is not a car company, by the way. In my opinion, it's a technology company. It's an AI company. And Tesla has multiple businesses. I'll cover all of that in my next video. Coming back to the point again, as I gave you the comparative analysis of the three markets, think about it. Where would you like to invest? And let me know. Are you invested in Nasdaq through ETFs or direct investment, whatever? Even people in India nowadays can invest through the ETF, or there are some specific funds doing that. Let me know in my comment section. Are you invested? And also let me know where you think the market is headed to, because the street is divided. Many of the retail investors like us are sitting on the sideline watching it. That's why I say all my videos are for entertainment and educational purposes. Entertainment for people who are sitting on the sideline and watching it, and educational for those people who are already into the market and playing the game. Guys, in my personal opinion, is the right time for the retail investors to ride the momentum, to ride the wave. Once again, remember the purpose of this channel is to give you financial education so that you act on it and make money. Let me remind you, all these discussions are for entertainment and education purposes. So please consult your financial advisor before making any investment decisions. If you have liked this video and would like to have similar contents on specific stock analysis as well as financial market updates, don't forget to share and subscribe. With that, I'll see you soon. As a goodbye from your friend Pankaj Sinha. Bye-bye.